Ladies and gentlemen, good day and welcome to the Nirlon Ltd Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations for Nirlon Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of the financial year 2026. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Rahul B. Sagar, Chief Executive Officer and Executive Director, Mr. Manish B. Parekh, Chief Financial Officer, VP Finance, Mr. Jasmine K. Bhaksar, Company Secretary, Vice President Legal and Compliance Officer, and Mr. Ashish Bharadia, VP Business Development and Investor Relations, Nirlon Management Services Private Limited. Without any delay, I request Mr. Rahul B. Sagar to start with his opening remarks, followed by financial and operational highlights of the company. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to our earnings conference call to discuss the performance of the first quarter for the financial year 2026. Let me first take you through the financial performance of the company. For the first quarter, the company reported a total income of Rs 167 crores, which grew by around 6% year-on-year. The EBITDA was reported at 132 crores, representing around 8% growth year-on-year. EBITDA margins were about 78.93%. Profit after tax for the quarter stood at around Rs 58 crores, which grew by 17% year-on-year, while PAT margins reported at 34.95%. On the operational front, the average occupancy rate for the company as a whole, comprising NKP and Nirlon House, stood at 97.5% for the quarter. As of 30th June 2025, approximately 280,000 square feet was vacant at both NKP and Nirlon House combined, out of which approximately 269,000 square feet at NKP has been licensed or agreed to be licensed by Deutsche Bank, Barclays, MUFG, Citi, and EY. Additionally, Accenture has licensed approximately 28,000 square feet at NKP, and Citi has exercised its option to renew 196,000 square feet at NKP as well. The board has, in its May 2025 meeting, proposed a final dividend of Rs 11 per share for the financial year ending 2025, subject to approval by the shareholders in the forthcoming AGM. Lastly, before we move on to the Q&A session, we would also like to proactively inform you that there has been no further update regarding any restructuring plans. Hence, we would appreciate if the focus of the questions on this Concall are about the operations and the financials of the quarter under review. We assure you that as and when any definitive decision is taken on these matters, we will inform our shareholders. With this, we conclude our opening remarks and open the floor to questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. A reminder to all participants, if you wish to ask any questions, you may press star and one. We have our first question from the line of Ashok Jain from Ayush Capital. Please go ahead.
Yeah. Good afternoon. Am I audible?
Yes.
Okay. As of 30th March 2025, that is the fiscal year end, approximately 92,000 square foot was vacant at NKP and around 6,000 at Nirlon House. This figure went up to 271,000 at NKP and 9,000 at Nirlon House as of the end of Q1, that is 30th of June 2025. What in Q1 of this fiscal, for how long was this 280,000 square foot space vacant, sir?
Okay. So I'm just going to give you a summary of what it actually was. So essentially this space was, the majority of this space was the space that was being vacated by Morgan Stanley, as we know. Okay. So what we want to say is that the space vacated by Morgan Stanley has been licensed and or committed with security deposit / LOI as on date, and whatever vacancy there was essentially the interim period between the old licensee vacating Morgan Stanley and the new licensee / licensees coming in. So essentially as of 30th June 2025, all the spaces vacated by Morgan Stanley have either been licensed, license has commenced, and or serious commitments with LOIs have been signed. So there's no real issue there. There is no space right now vacated by Morgan Stanley which is vacant without an LOI / LNL.
Okay, so
different spaces were vacated at different times. It was not a one-time thing, not a one-shot thing. It was a periodic thing. Some spaces needed some work to be done, so there were larger gaps between the new licensee coming in and licensee going out. Some spaces there were very, very small gaps of just a few days or weeks. So that's really what it is. But in a nutshell, there is no committed / unlicensed space vacated by Morgan Stanley.
Okay, but as for the majority, I understand the dates were staggered around the quarter, but I can assume that for the majority of the quarter, we lost 280,000 square foot rental income, right? For majority of Q1.
No.
Not for the majority.
Not for the majority of Q1.
Okay.
We cannot. That's not a correct statement to say, because a lot of actually 180,000 square feet was vacated by Morgan Stanley, I think around the 18th or 22nd of June or 18th of June or sometime in the second half of June. So, as I said, there are different dates for different areas being vacated by Morgan Stanley, but we cannot say that the majority of the space was, of this 279,000 was vacant.
Okay, but all of it has been relicensed now, and the rental income for the entire about 2.7 lakh square foot has commenced, right? It's going to show up in Q2, right?
Yes, I mean basically what has not been relicensed has been committed. However, the proposed license commencement dates have been finalized. In some cases, the gap is very, very small between Morgan Stanley vacating and the new licensee coming in. So I think Q2 will see some of these licenses and license commencement dates and license fee commencement both.
Okay. And the new leases were being signed at what rental rate per square foot per month, including the license fee at 80% efficiency?
So essentially, we want to say that some of these new leases have, of course, been signed at with annual escalation at higher rates than what we had in the past. Okay, especially the leases for the last building vacated by Morgan Stanley in the second half of June 2025. The rates were higher, of course, increasing, as well as
how much, sir? Figure how much?
As well as with annual escalation. So essentially, we can say that we signed at 180 plus.
Okay.
At approx 180, 185 with annual escalation as well. Some things are in the 170s with annual escalation as well. And also we should also look at the gap between the day that Morgan Stanley left and the day on which the license and license fee commencement begins. That's a very important gap as well. In some cases, as I said, the gap was very, very small, even less than a month. In some cases, even hardly 15 days, frankly. So we have to look at everything together. But basically, we have signed licenses in the region of 180 to 185 with annual escalation as well. So yeah, it's not really anything uncommitted, unlicensed at this point.
Right. I understand there's tremendous demand for NKP. So on a YOY basis, how much do you think is this 180 comparable to on a staggered basis? If you may just give me a ballpark percentage, that should be fine, sir.
180 compared to...
Hello.
I mean, we don't want to comment specifically on this YOY because there are different commencement dates, there are different rent frees, as I said.
Right. I understand.
You can see if you follow the IR reports and if you follow the financials of the last few years and few quarters, you can see the growth in the license fees / license revenue, whatever you want to call it, and it is what it is now, and it's been, I don't know what you want to call the growth, whether it's a steady growth or a consistent growth, but I mean the numbers are there and you can really decide how you want to classify this growth.
Okay, because despite the occupancy rates going down from 99.8 in last fiscal Q1 to 97.5 this fiscal Q1, they've actually shown a YOY rental income growth of 4.5%. So is it fair if I say high single digit annual growth in rental income? Should that be fair, sir?
Sorry, what was that?
Despite the occupancy rates going down, from 99.8 in Q1 of last fiscal to 97.5 of Q1 of this fiscal, we've actually shown a YOY rental income growth, right? Despite the occupancies being down by about 2.5%, we've shown a rental income growth of around 4.5%. So can I assume that the 180 is more like high single digit growth on a YOY basis? Is it fair? Because this is very complicated as the dates are staggered. Like we cannot make a apple to apple comparison. But would a high single digit growth in rental income be a fair assumption for the future?
We don't want to comment on the specific number like this, which is extrapolated with various assumptions. But you can see the quarterly financial performance in the annual report, and it's fairly clear. You should also keep in mind that this is basically based on Ind AS, which is straight lined. So the effect of the straight lining is also captured in the quarterly numbers as well. But I think you should look at the next 2 quarters as well, and whatever we are saying now and whatever the answers you're looking for will hopefully you see them in the numbers in Q2 and Q3 as well.
Okay. So in Q2 we should have the entire relicense space in the results, right?
Well, I mean, you'll see it. It's exactly like we said, that we are not really short of any commitment.
Yeah. And so, since our MAT credit now has been completely exhausted, the final call on the tax regime to choose for in the future, the old tax regime or the new tax regime, when will this call be taken? By the end of this fiscal, or are we doing it any sooner?
So theoretically, one has up till approximately September 26 to decide. But as you know, we are acutely aware of this issue, and once any decision is taken in this regard, we will communicate that to you. That's really what we want to say for now.
Okay. And sir, is our TDR monetizable in the future?
Sorry, what is that?
Our TDR of developmental rights, is our TDR monetizable in the future?
No.
No? It's not?
No.
Okay. Why so, sir?
So, actually we don't have a TDR. You have an eligibility of how much you can build on the land.
Okay.
If you don't use it, doesn't mean you can go and monetize it. TDR is very specific when you hand over something like a road, etc. to the government.
Okay. So it's not as if we can, GIC can use this TDR for another location or something. It has to be for NKP or not used at all.
We don't have any TDR. So just to clarify, there's no TDR. I guess you are saying from the eligibility.
Eligibility, okay. But we are eligible for TDRs, but we don't possess any asset of TDR right now.
No. So, just to clarify, we are eligible to develop a certain quantum of FSI on any piece of land in Mumbai. Okay. Irrespective of what your eligibility is, you can use lesser than that, which is what our case is. TDR is a completely separate thing where you generate TDR when you give something like a road area or an amenity to the government. We don't have any handover that is pending for us. So we have no TDR generation, so to speak.
Okay. And so,
sorry to interrupt you, Mr. Ashok. Can you please rejoin the queue?
Just one last question, sir, from my side, and then I'll be done. Should I go ahead or should I wait?
Go ahead.
Okay. Thank you, Rahul, sir. Thank you. As of 31st March 2025, we had about 173 crores of cash and cash equivalent, and the expected PAT for this fiscal looks like around 230 to 240 crores, and then we have about 55 crores of depreciation. So all going well, as of the end of this fiscal, that is 31st March 2026, we will be sitting on a cash pile of about 450 crores. So would you mind sharing our growth plans for the future, or maybe we make a balloon payment on our outstanding loan of 1150 crores because we have 450 crores. We are, paying interest on one hand and getting interest on the other hand. So would you mind sharing what do we do with this cash pile? Maybe we buy the other stakeholders of Nirlon House and own it 100%, or maybe we, make a balloon payment on our loan, or maybe we have some other growth plans. I would appreciate it, sir, because the cash pile is huge. That has never happened in Nirlon.
Whatever cash surpluses are there, we don't want to confirm the number you said right now. We don't want to confirm.
Right.
We say, as we have been saying and as we have been doing, the company will endeavor to maximize its distribution to shareholders. using its surplus cash flow after providing prudently for contingencies.
Okay. So the dividends may go up. That's great news, sir. Thank you very much.
I mean,
Thank you.
you're saying that. Yeah,
okay. Thank you, sir. Thanks a lot. All the best, sir. Thank you. Great.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. We have our next question from the line of Satinder Singh Bedi from Eon Infotech Limited. Please go ahead.
Yes, good afternoon. Congratulations for the quick lease back of the Decode by Morgan Stanley. So, sir, has Morgan Stanley fully exited from the expiry profile? It seems we've got only 34,000 left to expire in FY26. So, is it a correct assumption that Morgan Stanley has fully exited now?
Morgan Stanley has fully exited, and as we said, the space occupied by Morgan Stanley has been licensed to
Leaseback, yeah,
or committed with LOI/security deposit to new licensees/licensees. In the majority of the cases, the licenses have commenced and license fees have commenced, and that's really what we can say.
Yes, no, understood. I think that's a great outcome.
But there are different time periods. As we explained earlier, that because of the different time periods, you're seeing some of these numbers going up and down, but we can say what we said in the previous question as well as this what I said.
Yeah, understood, sir. On cost of capital, the spread has increased from 200 to 233 pips. So, any views on how do we plan to optimize this going forward? Okay, given that this is one of the largest components of cost. So, any plans on this? Okay, or any prepayment penalties that we suffer and okay, or whatever. So, any views on this?
So, essentially, if you see our interest rate now is approximately 7.6, 7.68. So, regardless of what the spread is, this is our interest rate at this point in time. Of course, we will continue to discuss with the lender for reduction of spread as well.
Okay. Any prepayment penalty clauses that we have on this loan, sir?
Well, we don't really want to get into
Okay, and any progress?
Yeah, we don't really want to get into that, but if I don't want to comment on that agreement right now without having the agreement in front of me. But if we are doing any prepayment or anything, of course, we will have to keep you informed.
Okay. Any progress on Nirlon House that could be shared, sir, in the last quarter now?
Nothing significant.
Okay. Fine. And on this FSI, so what is the currently eligible FSI for our parts? So what is the eligible FSI and what is it that we've used based on our built-up area?
So I just explain to you what it is. Since we are IT Park, our FSI eligibility will be approximately 5 plus fungible, depending on always on the road width. Okay, not just for us, but that's as per the policy which we fall under. And currently we have used approximately 2.7 FSI. It could be plus minus a few percentage points, but approximately 2.7, 2.75, somewhere there, 2.8 maybe.
Okay. And this 180, 85 that, or whatever, 170 to 185 that we signed, what was the average rental reversion that we achieved on these leases?
Sorry, is the average rental?
The rental reversion. So the new rent over the exit rent. Okay. So what is the kind of rental reversion we achieved on this?
So the Morgan Stanley spaces were at various different license fees because of different periods of signing the license agreement and different, most of them had different commercial terms, etc. What we can say is that we have some annual escalations for Morgan Stanley spaces vacated, which were basically 15% every 3 years in the past. So that is really a very significant change from previous license agreements. And the delta between the spaces vacated by Morgan Stanley would be different, so it's a little hard to give specific numbers on that. As you can see, at about 185 comes to about 230 approximately on carpet, so you can compare with other comparable assets in the micro area as well as in various other locations as well.
Okay, fine, thank you. And the notice for the AGM has come out yesterday. The annual report is not a part of that notice. Okay, so kind of when do we expect that, and or is it on the website yet?
I think we are going to send it out as always within the stipulated time period. You will get it in the near future, well in time, as per our regular annual practice.
Okay, so thank you very much, and congratulations once again on the great lease up of the vacated space. Thank you. Bye-bye.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone willing to ask a question may press star and 1 on their touch-tone telephone. A reminder to all participants, you may press star and 1 to ask a question. A reminder to all participants, if you wish to ask any questions, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Rahul Sagar for closing comments. Over to you, sir.
So thank you all for participating in this earnings call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valorem Advisors. Thank you once again from all of us at Nirlon. Thank you. Thank you.
Thank you, sir. On behalf of Nirlon Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.